Africa's insurance penetration remains below 3%. So, what will unlock the next wave of growth in the sector? John Gangla from Minet Kenya now joins us for more. John, good afternoon, and thank you again for your time. Looking at these numbers here, what are we seeing that will unlock the next wave of insurance penetration in Africa? Yes, John.
Thank you very much. Thank you for having me. As introduced, John Gangla. Now, straight on to how or what would unlock insurance in Africa in terms of penetration. You rightfully pointed out that it's about 3%, while in Kenya it's about 2.7%. Now, we have pointers that can help in penetration. One is the technology. Two is the regulation, and three is the financial innovation. When you talk about technology, you realize the distribution models of insurance products basically traditionally were being done by salespeople who would walk from one point to the other. Now, if you look at the mobile telephony penetration in Africa, it's very high, and the insurers are picking up insurance and putting it up in the mobile phone. For instance, in Kenya, you can actually buy insurance, motor insurance, without leaving your table. You just buy, they send you the certificate, you print it and put it onto your car. So technology, to a large extent, will lead to increased penetration in Africa. A lot of the underserved clients would be able to be underserved. For instance, we saw it during the lockdown under the COVID, when people were not going to the offices, but still using technology, we were still able to conduct our business as usual. Again, in terms of like regulatory framework, a lot of laws are coming into place to ensure that the insurance sector is streamlined in terms of liquidity ratios, so that for an insurance company to operate, there are minimum requirements. And what bedeviled Kenya sometime about 10 years or so ago, where a lot of companies were going under because of liquidity issues, is no longer there. The regulator is very strict. And again, if you look at financial innovation, the insurers are coming up with new products. I can give a raft of a lot of new products that are coming up. For instance, if you look at in the agriculture sector, the agriculture sector suffers a lot in terms of the weather and reliability of climate change. And insurers have developed products that address those specific areas. For instance, if you look at drought, like in Kenya, I would give an example. In northern eastern Kenya, there's a lot of drought. What happens is there are insurance products that does not necessitate one to go to the ground to look at the cows and so on and so forth. They just take the satellite images, and based on the preset perimeters, triggers are set and claims are paid. So those are things that are within the insurance that would lead to increased penetration. Additionally, there's a lot of information onto the public, the general public, in the entire of Africa. Like, for instance, if you look at Minet Insurance Brokers, we are in 10 African countries, and what we do in Nairobi, we replicate in each of the 10 African countries.
Yes, and John, in terms of a risk-return profile for insurers investing in low premium and also at the same time high-volume inclusive insurance products, what are we seeing in this space?
When you talk of risk-return profile for insurance investing on low premium and high volumes, what we are looking at here is what is called financial inclusivity. A lot of people have been excluded from the mainstream finance if you look at insurance. If you compare this with banking, which in Kenya, for instance, 30 years ago, a lot of people were excluded from the mainstream financing. But today, what has happened in Kenya, for instance, if you look at statistics, if you look at 80% of the people of the workforce, they are in the informal sector. While you find that only 20% of the workforce are in the formal sector, who can be picked from the economic radar. Now, what has happened is insurers, realizing that there is only that 20%, they have gone for the 80%. And how have they gone for the 80%? What they've done is, although to develop the low premium products, it's very expensive, but therein lies the opportunity in the sense that there's a lot of population out there, and the insurers have developed micro insurance products, products that suit the SME. For instance, today you can buy insurance for
Yes.
medical insurance that takes care of the family. So if you look at the reality on the ground where, yes, the returns are low, but there is very big potential because of the masses.
Indeed, John, we leave that conversation. There are quite a number of innovations we're seeing, and also including mental health products. So thank you for your time.